What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So Virgin Galactic had its full year earning call this past week. The stock closed on Friday virtually flat with a 0.04% weekly gain. They did, however, manage to beat expectations, which was positive, but there's also some not so great news to be aware of. So in today's video, I'll go over the latest news around Virgin Galactic, then take a look at analyst ratings, some changes here to cover, and I'll close with where I stand as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop this video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so let's start with a quick rundown of the earning results and the items that stood out to me. As I said earlier, Virgin Galactic did beat expectations by delivering higher revenue of $3 million versus the $1 million on a year-over-year basis. Lower losses came in at $114 million versus $151 million on a year-over-year basis. And that all resulted in an improved operating expense on a year-over-year basis of $117 million versus the $154 million the year prior. Even if you consider the fact that the revenue number is rounded to $3 million, the actual number is 2.8 million, this still translates to an earning per share of a loss of 26 cents versus the expected 30 cents loss. So that's a win. Now, looking at the balance sheet, they are sitting on $982 million with a projected cash burn of $125 to $135 million. If you assume that the highest cash burn rate of $135 million is what we go with, this gives them just under 2 years of runway from here. So this is the first piece of not so great news, right? The other is the cold hard realization that this isn't enough to take us to Delta in 2026. Essentially, we'll be falling just short by a quarter or two, meaning that in the same way that they raised $484 million throughout last year, each time the stock saw some strength, this will likely happen again at least one more time along the way. And that's something important to be aware of. There was a strong focus on covering the update from the Delta spaceship and the progress on their factory in Phoenix. The punchline here was that everything is on track, which is amazing. And as we move forward, it's going to be key to keep up with the progress they make on Delta and their ability to stay on track to the plan they had previously communicated. As it stands, we're still tracking to the final assembly and ground testing in 2025, with commercial operation in 2026. Again, this is good news. And of course, Virgin Galactic is well aware that once the Galactic 7 flight is completed in Q2 this year, all eyes will turn onto the progress on Delta, right? And so to that end, they just released the Delta Diaries. Let's take a listen to this quick 1-minute video explainer of what these diaries are all about.
Hi, I'm Dave Crawford, Vice President of Engineering here at Virgin Galactic. I'm currently in our Spaceship Innovation Lab in Tustin, California, home to the development of our Delta-class spaceships. The Delta program is our next-generation spaceship, and we're leveraging a lot of the learning and work that we did on Unity to build a platform that can take us to space on a much higher cadence. We're leveraging a lot of industry standard practices that will allow us to dramatically accelerate our ability to deliver these vehicles to the market. It allows us to take a certain amount of design and test activities offline in order to do it in parallel. It dramatically accelerates our ability to get to the next phases of the program in really reliable ways. Unity has been a great platform for us and really proven our ability to deliver an aspirational, exciting experience for our customers. The Delta program is only going to magnify that. The Delta vehicles will be able to take 6 passengers versus 4 passengers and fly on a much higher cadence. This is just the first of many insights behind the scenes that we're going to give you this year as our Delta-class spaceships take shape.
That is an absolute genius idea if you ask me, as it keeps existing customers engaged with the process, ensures current investors are informed and assured things are going well, and ultimately, it will provide a signal to prospective investors who are not yet willing to jump in, a cue once we've made substantial enough progress and are closer to commercial flight on Delta. The last thing to note here is the update on Galactic 7. Mike Moses, president of Spaceline at Virgin Galactic, stated that the root cause of the pin detachment was identified. The team at Virgin Galactic is now implemented the needed corrective actions to fix the issue and will be preparing to return to flight. He noted that the FAA collaboration has been a positive one. No actual redesign is needed to get back in the air, meaning, and this is what we care about, Galactic 7 will launch as expected in Q2, with the official date to be announced very soon. This is huge news, right? So to sum it up, we're on track for all upcoming deliverables, including the Delta factory opening in mid-2024. The factory progress cannot be overstated as another huge news to be excited about. On the flip side, the primary watch-out is further dilution as we get into late 2024 and early 2025, especially if the stock starts showing strength and climbing towards the higher end of the projected range. And that is a good segue into where analyst sentiment now stands post-earning call. Most have gone ahead and refreshed their recommendations. The overall consensus rating is hold, which is unchanged since the last time we spoke. The recommendation is made up of 6 ratings, 1 buy rating, 4 hold ratings, and 1 sell rating. Again, the main takeaway here is that the sentiment has not degraded, and that is always good. The high end of the range is now a bit higher at $4 even versus $3 prior. Meanwhile, the low end is unchanged at $1.75. The average consensus price target has also increased from $2.42 to now $2.56. This implies a 51.48% increase from the current level and over double when we hit the top end of the range. And so really what I want you to realize here is that there's still a decent amount of gains that can be made while we're hovering at these levels, right? It simply requires a bit more active effort. Another important point is that we're soon going to be entering a period of no commercial flights post-Galactic 7. One of the indicators I'm going to be paying attention to here and keeping you all up to date on is the stock ownership distribution. You can see here on a matrix that we have 4 groups that make up 3 major buckets. Insiders, those are executives at Virgin Galactic, institutional investors, which include mutual funds. Last but not least are public companies and individual investors like me and possibly many of you watching. Tracking this distribution can be a great indicator of the overall market sentiment toward Virgin Galactic, but most importantly, looking at insiders' buy and sell activities can be a strong indicator of confidence for the future of a company or the opposite. Now, as I look at all this, my goal has not changed. I've told you before that 2024 is an accumulation year. I fully suspect that we will continue to experience these big swings in either direction, and I'm confident that they have a path to delivering on Delta. But that is still 2 years out. So in the meantime, the plan is to fully take advantage of these sub $2 prices, build my core position that I will hold, but purchase additional shares that can be used to maximize on those 20 to 50% move up will likely experience along the way in between retracements. The lower my average cost, the easier it will be to capture the near-term upside. At the most basic level, buy low and sell high. Take profit along the way, which will help make the journey a bit more enjoyable as progress on the factory and Delta takes center stage in the second half of this year. The last thing I will say is this. This is an extremely risky investment with incredible upside potential as a result. But let's not forget that the stock is down over 90% from its peak. Sizing your portfolio allocation here is going to be crucial. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.